SpaceX is a company with unmatched ambition to transform the industries it operates in. That kind of change doesn't happen overnight, though. There's uncertainty around how frequently will Starship be launching in 5 years? When will we have space-based data centers? We can't be precise on the timing of that, but we do know that the opportunities that unlocks could be really significant.
In 2002, Elon Musk travelled to Moscow to negotiate buying 2 decommissioned missiles. Drawing on his PayPal wealth, he wanted to land a robotic greenhouse on Mars and reinvigorate interest in the red planet. The meeting went badly. As one biography of Musk recounts, the Russians dismissed the entrepreneur's $8 million offer, saying, "Young boy, no." On the flight back, Musk checked his numbers and concluded, "We can build a rocket ourselves." And some 24 years on, Musk, his chief operating officer Gwynne Shotwell, and some of the brightest engineers on Earth have taken that realization and rewritten the economics of getting to orbit. And Baillie Gifford has supported them in their mission as a shareholder since 2018. To mark SpaceX's record-setting listing and addition to the Nasdaq 100, we're dedicating this episode to the company. I'll ask the investment manager who propelled us to take that initial stake, what lessons he's learned, and what's the latest game-changing company to catch his eye. Welcome to Short Briefings on Long-Term Thinking. I'm Leo Kelion, and I'm joined by Luke Ward, an investment manager on our private companies team and co-manager of the Edinburgh Worldwide Investment Trust. Before we begin, a quick reminder. As with any investment, your capital's at risk and your income is not guaranteed. Luke, welcome to the show.
Thank you.
Luke, the last time that you were on the podcast was in 2025. Huge amount has happened since then, and I do want to get to the initial public offering, the listing of SpaceX and the future of the company. But to begin with, let's find out why we were able to invest so early. So what was it that first drove your interest in SpaceX?
Yeah, so this probably started during my engineering degree in mechanical engineering, and it was around that time that the space shuttle was being decommissioned, and there wasn't an obvious successor to that in space exploration. Post the financial crisis, there wasn't really the budget to support a big investment there as well. And so for me, many of the other people on the course, it was a bit depressing that we weren't really pushing the frontiers in the same way that we'd maybe been led to believe from growing up on this sort of diet of science fiction. But there were a few companies and entrepreneurs who were taking the risk on developing rockets of their own. SpaceX was one of them, although nowhere near as sort of famous in the public eyes at that time, but held up as a place where it would be an aspirational place to go and work for. That sort of stuck in the back of my mind as I became an investor, and looking at many more traditional industries, had still kept an eye on this company. And it was in 2015 when it demonstrated reusability, so the ability to land and recover one of these rockets, that I think I had the confidence to suggest to colleagues that this might actually be an area that's investable for our clients, and it could actually be something that could be profitable rather than something that's usually the preserve of governments and is associated with cost rather than capability.
So I looked in our research library, which is where you and the other investment managers and analysts publish their thoughts. And the first paper I could find on SpaceX dates to 2016. You wrote it, and inside it, you've pasted a photo of Elon Musk shaking a pair of maracas at the company's launch. And beside it, you wrote a note saying that SpaceX has a very different mindset to the incumbents in the space industry. Percussion instruments aside, what were you getting at there?
Yeah, so trying to make the point that culturally this company is quite different. That's maybe a bit of an evocative way to do it in a research note, but I think it hopefully got people's attention. The point being that if you structured a company the same way as we'd always done, optimizing for the political reality of budgets rather than the blank sheet of paper afforded by billionaire status, for example, you would end up with a company that just does something very similar to the past. And if that was the case, then it's not something which is really going to become a standout investment. For a company to transform its market, it needs to reimagine it. And this was what I think SpaceX, in addition to the product innovations it developed, was the real sort of mindset innovation in how to tackle this problem.
And as you mentioned before, by this point, the company had celebrated Falcon 9 Flight 20, which is when it vertically landed its rocket booster system, the first time that had happened for an orbital class craft. Why was it so important for it to show that partial reusability was going to be possible in theory, and maybe full reusability in time?
It's all well and good for products to be better, but if they're not cheaper as well, it's hard to see how they'll be adopted at scale. And this was the perennial problem in rocket launch, is that rockets are disposable. The heritage comes from military and ballistic missiles. There isn't an incentive to make a reusable ballistic missile. The whole point is that it's not. And so the industry had aggregated around that as a concept. Reusability allows you to take something that was disposable and make it depreciable instead. So you can spread that construction cost across many launches, and you can access a higher profit margin as a result. That then gives you the financial freedom to reinvest in the R&D to allow you to achieve even more. And that's the part of the system which I think many businesses or many founders often at an earlier stage struggle to optimize for or treat as something that is to be dismissed rather than something that's core to their ability to provide their product at scale.
And this was still to get to Mars. I think at this point, Musk had actually upgraded his goal from getting a robotic greenhouse on the red planet to setting up a self-sustaining city for 1 million people there instead. Now, to many, that would have seemed like science fiction rather than an investable business case. But you described it as an important forcing function. What did you mean by that term?
If you want to do something really transformational in an industry, there's a strong argument that you need the best people in the world to come and help you do that. The best people in the world have got many job offers, and so you have to have something distinct in order to be able to attract them to this place. Being able to offer the top performing engineers a place in the history books is very valuable compared to saying, well, I'll just offer you 10% more than the next person's going to pay you. Again, from my own personal experience, the thing which drew me to engineering in the first place was that vision of a better future, technological innovation, etc. And so I think people are going to self-select for those kind of visions. The important nuance, though, is that that vision is not mutually exclusive with better, cheaper, and faster. So in the process of everyone working very hard to realize that what might sound science fiction ambition, you actually develop something that is very commercially compelling along the way. And I think that's the bit which people missed at the time, was this can sound like a billionaire's sort of flight of fancy, but actually it's very economically rational to have that because it has a path dependency towards commerciality as well.
So at the time, as we said, this was a private company limiting the amount of information about it in the public domain. In your research, did you manage to get some face-to-face time with management to learn more about it? And if so, how?
Yeah, so we spend a lot of time before we invest in companies getting to know them from the outside before we get to know them from the inside. So as part of that, I went to lots and lots of space conferences, both sort of technical and business, and tried to use that to bump into some of the management teams, some of the engineers who were presenting there. So I remember meeting Gwyn Shotwell at a conference in Luxembourg, of all places, about the future of space. At the time, she was absolutely mobbed by engineers trying to throw CVs at her. We were trying to throw a business card instead to sort of say, we as Baillie Gifford think that there is something compelling to what you are doing over the long term. We like to back founders and businesses which have that level of growth ambition. We would love to talk to you more about, are we aligned with you in that sense? Is what we see from the outside the same thing which you see from the inside? And are there ways in which we could work together to unlock a better outcome for everybody?
Did it help that we were already an investor in Tesla?
Yeah, I mean, it's all very well and good me coming and sort of anonymously almost throwing a business card at the COO, but they go back and they actually check that against, well, who's this Luke person and who's Baillie Gifford? I've never heard of them before. When they're then able to point to, oh, Baillie Gifford at the time were the second largest investor in Tesla after Elon Musk, have been supportive for quite a long time period there. That gives you the credibility to follow through with that access and be able to have these conversations seriously with this company rather than aspirationally.
So you published your buy recommendation in August 2018. And a few months later, three of our investment trusts, EWIT, which you now co-manage, Scottish Mortgage and US Growth Trust, all invested in the company, followed a little later by Schiehallion. I went back to read that note as well, and there was one phrase that jumped out at me. I wonder if I can quote it to you. You wrote, "If we're wondering where a company the size and scale of the Dutch East India Company might ever be rational or permissible again, we might want to look up at the night sky rather than somewhere here on Earth." Now, that comparison carries a little bit of baggage, bearing in mind that the East India Company ruled an empire by force. I'm hoping that wasn't what you were getting at. So what was the point you were making?
Yeah, that wasn't the parallel I was thinking of. The one I was thinking of was more around the business model and the growth opportunity there. So taking that as an example of a extremely large company was created on the back of dominating the infrastructure and access to resources in a brand new market in a way that was highly profitable and scalable, held in place by force. So there's definitely a moral judgment on that. But the analogy I was trying to draw here was, well, space is similar. It has similar potential in terms of the resources and the potential that are there. There isn't the infrastructure to provide economic access to that, though. But if there was a company which was able to do that and almost uniquely able to do that, could that start to command the kind of value and the kind of market capitalization that the companies of old did when they were almost monopolistic providers of services there? Space was the only place where that is going to be possible again, because it's an area where commercial entities as well as governments are probably on the same level of footing, and it's so much green space to go after rather than existing markets where people are fighting for market share.
And I think you made this point about vertical integration being similar between the two. Take the jargon out of that and explain what that means.
To use the example again of the Dutch East India Company, it owned the ports, it owned the ships which conducted all the trade. It oversaw the entirety of the value chain there, rather than this being a fragmented set of companies. That allowed them to optimize decision-making and capital allocation for where it was most rational for the overall system rather than point solutions. SpaceX is similar. Rather than following the path that other aerospace companies have of outsourcing a lot of that supply chain, often for political and patronage reasons, they, by virtue of having this large balance sheet and the blank sheet of paper, were saying it makes much more sense for us to do all of these things ourselves because we can be way more efficient with the overall system if we do that. And so again, another analogy to be drawn there between the kind of companies which pioneer and dominate in industries are the ones which have that sort of system level of thinking and ability rather than just the individual product level.
So in that original thesis, you managed to see a lot of what was going to happen and you got a lot of that right. But was there anything that you got wrong in your original notes?
Oh, absolutely. I mean, the timelines which we were working to for this were definitely off. The company has taken longer to develop products than the ambition certainly of the founder would have signposted at the beginning. The joke is, which SpaceX often have, is that we make the impossible late. There is still a lot of value in that, but the point is it's not making the impossible early, which I think might be a stretch too far or maybe a bit too ambitious. And so, for example, the Starship rocket, now we were considering that might be operational many years earlier. But that hasn't undermined the value creation that the business is able to demonstrate. And I think that's because competition hasn't shown up, which I think was the other area where we got the research wrong. We're saying we can point to several of the competitors which have got similar level of backing, similar mindset of where they see this market, but weren't able to deliver those product and business innovations in the same way that SpaceX has done. And so they haven't grown to anywhere near the scale or capability that SpaceX has. I would have expected, given the prize on offer here, that there would be more mature companies in this area.
So if I bring things up to date to the here and now, I know some of Baillie Gifford's other portfolios that either didn't or couldn't invest in SpaceX before managed to get near full allocation of the stock at IPO before trading began. And that was in large part because of the long relationship that we've had with the firm. But if we put access to the IPO to one side and also all the early growth that we captured for some of our investors in the trust that invested in it, what advantages has Baillie Gifford derived from having been an investor in SpaceX for so long?
The IPO process is a very sort of rapid and abrupt process. So The company very quickly comes out with a series of accounts, does a roadshow, and tries to convince investors that there's something attractive about the equity here and that they should participate. But the amount of information and experience that people have to make that decision is often quite constrained. By investing in these companies privately over, I think it was 8 years, which we've been invested in before it came to IPO, you're able to see how that company behaves in both the good times and the bad times. You're able to assess how they allocate capital in response to that. You're able to get insights around how they have thought about the competitive environment in a way that you just don't get access to at the IPO window. SpaceX has encountered multiple failures on the path to developing reusability and these other capabilities. Seeing how they made decisions in response to that can help inform the probabilities of success you might put on their future ambitions. It might inform how you judge the management team and their competence and their ability to deliver on some of these promises in a way that if you had only got to know the company over the past couple of months, it would be a lot harder, I think, to make a confident decision about that.
And how about other companies? Has having a holding in SpaceX informed some of Baillie Gifford's other investments?
We made an investment in a satellite company called Astronis subsequent to the SpaceX investment. One of the main reasons there was the learnings which we had around where's the cost curve going over the future, how attractive might that business model be in the coming years, how plausible would it be for them to launch their own satellites. And Astronis is one where they're doing dedicated sovereign satellites for individual countries or users, which is something that Starlink might not be able to provide. So it's equally where are the competitive tensions going to be, but also where are the unlocks that SpaceX and other companies are developing such that incremental investments might make sense.
So these are effectively satellites that are higher up, so they hover in place, is that right?
Yeah, they're up in geostationary orbit, much further away, but they're better and cheaper than the ones which came before. But also they have this added element of security and sovereignty where the end user has full control over the system. Whereas with Starlink, it's very good for lots and lots of users, but no individual user has visibility of traffic on the entire network, which if you've got a defense application or a highly secure application, some customers just want their own dedicated hardware, either for paranoia or practical reasons.
And then on the public equities side, I think we've also got a holding in Rocket Lab, is that right?
Colleagues have invested in Rocket Lab for some of the listed portfolios. And again, there I think it's the ability to see where are SpaceX going with their products. They're going into heavier, larger launch systems. And is this leaving an area for others to compete in this smaller and the medium lift area?
Okay, I want to turn to the future, what happens to SpaceX over the next 10 years. Let's start with Starship. If SpaceX already has the Falcon 9 flying regularly and reliably, why does it need a bigger spacecraft?
That is kind of the mindset of the legacy industry. Like, we've got a good enough product. Why do we need to invest in a better one? We're getting paid for this. Why take that risk? It speaks to what's been fundamental about SpaceX. It's because as you go down that cost curve of making things better and cheaper, you unlock more and more market opportunities for that product. So the space shuttle was able to unlock government and maybe some expensive commercial access to space. Falcon 9 allowed you to develop a satellite communications network affordably. That was at around about $1,000 per kilogram price point. If we can get down to the $100 per kilogram price point or a $10 per kilogram price point, does space-based manufacturing make total sense to do in orbit? Can we make things cheaper and better in that orbit? Can we start developing data center compute? Can we start developing mining or bases on the moon or laboratories there which might perform better? Those things sound very science fiction at the moment, but if you can be the company that has the proprietary ability to unlock that and do it at a price point that is attractive for consumers, there's an enormous growth market waiting there if you can get these rockets to that level of capability. And so that's the prize on offer. It's not just thinking about, well, what's the size of the market we can see today, but just how much bigger could this be in the future if only we had the product and the price point that could unlock it.
If you move on to Starlink, the satellite broadband side of the business, it's already got thousands of satellites in orbit. It made nearly $11.5 billion in sales for the company last year, representing about 60% of its revenues. Is there much more potential in your mind for further growth of that side of the business?
Yeah, I think we're just at the start of where this could get to. So right now, you need an antenna about the size of a laptop to be able to connect to this service. That is great if you're in a remote or a rural location where you don't actually have access to high-speed broadband, because it gives you the direct connectivity to the internet. If you are closer to a city, though, fiber optic is probably a better or more affordable solution for you. That can change over time, though, as we put more satellites into orbit and we reduce the cost of these antennas. That price point of attractiveness shifts significantly for these consumers. So over time, it's going to get more and more affordable, whereas I think most people's experience of their utility bill is that it gets more and more expensive over time. Having that dynamic means that the market opportunity increases over time rather than shrinks over time. And so there are many use cases which we're already seeing in terms of in-flight Wi-Fi connectivity, on cruise ships, these things being bolted onto tractors, onto mining equipment, etc. They're really proliferating around some of these use cases. The really exciting place which we're going to get to, though, is what happens when these satellites are able to connect directly to a cell phone, such that almost any device with a SIM card in it will be able to connect to the global communications network. What does that mean for the performance and the capability of the economy? Well, if we want to have robots to automate dangerous tasks or do things where we can increase productivity, having a way to connect them to the internet wherever they are is going to be really important for them to function properly. And so arguably you need this kind of infrastructure globally before you can roll out many of these other solutions. If you and I are, stuck up in a mountain somewhere and we have an emergency, we want to be able to call for some help on our phone rather than to have to lug this big antenna around with us. So there's many sort of safety and performance use cases where that would be advantageous. Just broadly, in terms of bringing everyone on the planet, giving them access to that level of communication and intelligence through AI as well, I think is really going to improve levels of education which we can offer, the opportunities which people have, and the kinds of businesses which can be built and serviced around the globe. All are going to be built on what this fabric enables.
You mentioned AI, so let's talk about that, because in February, the company bought xAI, another of Musk's companies, best known for its AI model Grok for the social network X, and indeed for renting data center capacity to the likes of Google and Anthropic. That is quite different to the rockets and satellites side of the business. I just wonder, can you tell me a little bit about how you think about it fitting together?
Yeah, I mean, you asked earlier about what did we get wrong about our research. We certainly didn't expect that, we're going to be acquiring Twitter at some point down the road and going after an AI use case. But that is something which is now practical and plausible for them to do because of the innovations they've made in rocketry. So if you consider what are the cost inputs to a data center, there's so much attention in the world of finance right now on the capital expenditure that's going into compute. If we assume for the moment that structurally we are going towards a world where the need for compute and intelligence is a confident thing which we can expect of the future, then the question is how are we going to provide that? And when I look at the traditional and terrestrial way in which we provide for compute, there's three main inputs to that. There's the compute chips themselves, there's the power which you need for them, and there's the construction cost of building the actual data center itself. Only one of those three is on a cost curve that has been improving over time. So Moore's law in the chips, which allows you to double the number of transistors which you're able to fit in a particular area over a particular time period, but also means that the cost comes down at greater and greater volume. I think we can be reasonably confident that that is going to continue. They're keeping advances there. But when you get to, well, how are we going to power these chips? A lot of the way in which we make energy as a civilization is at the end of an S-curve rather than the start of an S-curve. Coal power plants aren't getting that much better. Neither are gas power plants. Nuclear power plants are quite fixed. We have had improvements in batteries and solar panels, but again, that's mostly come from installation costs and other sort of ancillary services rather than big breakthroughs in the chemistry there. All of this is to say that it's hard to see how power can scale at the same rate that compute can scale. And so that's a big question mark for as we have these projections for building more and more orders of magnitude, more compute. I don't think anyone's quite got a convincing answer to how we power that all today. And then the construction cost as well, equally at the end of an S-curve, pouring concrete, erecting steel, all of the services around electricity and the plumbing, the cooling of these systems are all quite mature technologies. And so again, there's question marks there about, well, how do we scale this out, particularly in an environmental context, where I think there are some fair questions about, how much water are we going to require for this aspect? How much is this going to infringe upon people who are living around these areas or affect their own electricity cost if we've got this big demand and we can't scale the supply there?
And just for members of the audience who aren't familiar with an S-curve, it's the idea that things go slow and then fast and then slow again. And you're saying that a lot of these things are kind of stuck in
the maturity and the affordability tends to improve over time, but then peters out as you get incremental innovation tends not to be as good as the initial invention. If we were to then contrast those inputs with a space-based data center, similar three, but on radically different improvement curves. So the chips are on a similar one, although we'll have to make some accommodation for radiation hardening of those, which we have experience with in space. Power generation, there's a lot of solar power available in orbit. It's there 24 hours a day. But the solar panels can all be mass manufactured in a factory and bolted onto a satellite. And so the installation cost and the construction cost of those is quite different to how we think about a solar farm terrestrially. And then the construction cost is actually a launch cost instead. We don't need to build the physical container and all the gubbins that goes inside it. We need to put these satellites on an affordable rocket and put them into orbit. And there is where SpaceX has the real proprietary ability to offer an improving proposition there. As the Starship rocket gets better and better and more scalable, that installation cost for space-based data centers comes down and down and down by orders of magnitude. And so whilst today it might not be that economically attractive to do AI in space, if you extrapolate the direction of travel both terrestrially and in space for the cost curves, there may very well be a point in the future where it's highly rational to install data centers in orbit. In fact, it's maybe the more compelling place to do it. If that is the way we're going, it also means that SpaceX might have a proprietary ability to deliver a greater level of intelligence than other companies can, because the fabric of compute which they have might be inherently more scalable than those of others.
Huge engineering challenges, though, not least
Absolutely.
Trying to get the heat away from the chips in the vacuum of space. Does the scale of this company's ambition ever give you a moment to pause?
Yes, continually. This has much more in common with the earlier stage investments that we make for clients rather than the later stage, more mature ones, which we do. That is the risk and the reward of investing in SpaceX, or has been to date, is that this company is constantly pushing the frontiers and doubling down on what they think the potential is here, rather than resting on their laurels. We want to be long-term growth investors for the benefits of our clients, and we want to find companies which have a proprietary ability to reinvest capital at higher rates of return than others might be able to do. This is a company which is increasingly trying to offer that in new areas and at new levels of scale. So there is a real attraction in that, but there is also, to your point, a real risk in that. The probabilities of success here are really important, but there's also a lot of uncertainty around that. There isn't a precedent for a lot of the things that they're doing. So to make a long story very short, yes, this is constantly something where assessing the risk and reward here is really important for us.
You talk about risk. One of the other things that we look at when we invest in a company is our ability to engage with the leadership. And you've talked about the fact that we have met with the management many times over the years. But one of the things we have to think about is the fact that Elon Musk still has 85% or so of the voting rights in the company, even after the IPO. And that limits how much influence we or other shareholders, or indeed the company's own board, can have on it. To some, that's a red flag. I just wonder how you think about it.
It's both, again, as with the business, it's risk versus reward there. If you have a very dominant shareholder in any business, they set the direction of travel, they set the capital allocation decisions, they shape what this company will look like over the long term. If you and your clients are aligned with that direction of travel, that can be quite a beneficial thing. If there is a misalignment, that can be quite a detrimental thing. So figuring out what is the direction of travel, what is the evidence of execution in the past is really important in terms of judging, well, is this something which you want to take a risk on for the future as well? I don't think there's necessarily one size fits all for governance here, and there's strong reasons for companies which are doing something ambitious to have a defensible cap table such that they are able to make these big bets with the capital which they have access to. But then conversely, how do you sort of challenge and make your views heard on that?
And what do you mean defensible cap table?
So in terms of having activists come in and try and change the direction of travel of the company, or saying, well, rather than investing in Starship, for example, let's just keep Falcon 9 going and Starlink and not be too ambitious about the future. And there's maybe a very reasonable business which we could operate there. That is a perfectly reasonable thing to suggest, but it also limits the amount of upside you may be able to have access to there, or over what time period as well. We certainly haven't been worried about expressing our views about this company and many others in the past, and having quiet words in private as well as words in public. But I think it is something which everyone has to take a view on what level of control are they comfortable with in a situation like this, and where does that sit in terms of the risk reward they have for their clients.
So Luke, I want to put the spotlight on you now. These days, you're a full-time member of Baillie Gifford's private companies team, in addition to continuing your duties as an investment trust manager. Can you tell us a little bit about how you've taken lessons from SpaceX and applied them and continue to apply them when you look for companies in the private sector?
So I think the thing which separates good companies from great companies is where they build these flywheels that can improve their chances of success, but also the size of the market they can go after. SpaceX, I think, is a quintessential example of something like this, where they've used a product innovation to develop a business innovation and used that to completely reshape the market, so a market or an impact innovation. But in the process of doing that, they then complete the circle by reinvesting in a new product innovation, which then unlocks a further financial innovation and again allows them to reshape the market. Those companies which can do that consecutively can compound their advantages over time, as well as compound the market addressability which they have. So the thing which I look for in several other companies is, how are the management teams thinking about joining the dots between the engineering skill set and the entrepreneurial skill set, and what the market may be possible for in the fullness of time if they're able to execute well on those things. The temptation for many people at the earlier stage is to just focus on product innovation and say, well, this product is just better, and so everybody's going to adopt it for that reason alone. And they miss out the optimization around, but is it cheaper? Is it quicker? Does it do something from an economic perspective that allows you to sell it in a more compelling way, or allows you to change the rules of the game almost in the market such that you can help consumers unlock something they didn't even think they needed, but at the same time generate the profits that allow you to reinvest in that R&D flywheel over a long time.
And I know we discussed this stepping stone concept in the last podcast when you talked about investing in companies involved in nuclear fusion and quantum computing. But bring us up to date. Where else are you now applying the framework?
Yes, going screaming back to earth, the construction industry. I was out in Texas recently visiting a company which we're looking at, and they have a system which uses robotics, proprietary materials, software, AI to print homes far quicker and cheaper and in a better form factor than traditional methods are able to provide. For most people around the world, housing is the most expensive cost which they have in their daily lives, and that's if you're lucky enough to be able to afford one in the first place. It's almost a universal challenge for society. So I think there's a massive problem to be solved here, but technology hasn't been able to make an impact because I think a lot of solutions have been point solutions which don't take into account the industry itself. How do you get small building firms to adopt high technology? But also, can it be cheaper at the same time? Just as we were talking about how the rockets, it's just as important, if not more so, that they're affordable as they are capable.
And you say better form factor. What does this actually look like?
So this looks like a huge robotic dinosaur that 3D prints concrete outlines of homes, and you can print a house like that in 7 days with a crew of 2, rather than something that would take closer to a month and a half with a crew of about 10 people. And so it's better, it's quicker, and it's cheaper than traditional methods.
And the homes themselves, are they better? Are they aesthetically pleasing?
Yeah, so it doesn't cost you any more to do curves, which is quite a change for architecture. But also the material itself, this concrete, it is more resilient to extreme environments. It's fire resistant, it's water resistant, it's very wind resistant. But it can also be energy efficient as well. It operates as a heat sink or a heat source in different times of year. And so when you combine all these together, you could actually deliver a better, more aesthetically pleasing product, but have it cost less than the sort of cookie cutter experience which we have when we're doing housing at a mass scale today.
So that's one to watch. I'll be fascinated to see what happens with that potential investment. Luke, I always like to finish the podcast the same way by asking my guests what book they're reading or have recently finished to get an insight into their wider influences. So what's made it onto your reading list?
Oh, this is going to be depressingly nerdy. The instruction manual for a Titan 3D printing robot. It's quite a dense read. I wouldn't necessarily recommend it to many other people, but yeah, this is the kind of stuff which, for some perverse reason, we find interesting.
Okay, we'll put a link to that in the show notes for anyone else who wants to learn more about how the robots work. Luke, it's been fantastic having you on the show. Thank you so much for coming on.
Thank you for having me.
And I hope you enjoyed this conversation too. We've linked to Luke's previous podcast and other articles we've written about the company in our show notes. And you can find out about some of our private companies team's other investments at bailliegifford.com/private companies. Subscribe via YouTube, Spotify, or any podcast app to be the first to know when the next episode is live. But for now, that's it. Thanks for listening, and I look forward to briefing you again soon.